Welcome to the ISO Show, dispelling myths and sharing tips for success to improve your business with ISO standards.
If you're listening to this podcast, then you're in great company. We've got thousands of listeners who have a thirst for continual improvement and raising standards in business. Whether your interest is in quality, sustainability, or risk standards, I'd love to welcome you as a member to our online platform for all things ISO, the ISology Hub. The ISology Hub is the leading place to get access to all of your online resources, from in-depth training courses through to our very popular coffee break training, to templates and action plans and many other resources to help raise standards. As a member, you get access to over 100 courses, taking you from learner to practitioner to leader. The ISology Hub has all the resources that you need, which will really help to make your life easier and to help improve compliance in those business critical areas. So if you'd like access to learning and compliance resources ranging from data privacy to environmental management, anti-bribery, business continuity, quality, health and safety, to name just but a few, the list is endless actually, then we'd love you to come and join us. Just head over to the isologyhub.com. Hi, and welcome back to the ISO Show. This is part 2 of our ESG Reporting Disclosures podcast, and I'm going to be covering a standard that has very recently been introduced just last year in 2023, and that's the International Sustainability Standards Board Climate-Related Disclosures, ISSB S2. Now, they don't make life easy for us, do they, when it comes to the naming conventions. So, yeah, fasten your seatbelts. We're in for another quite technical podcast, I'm afraid. I shouldn't make any apologies for it. I mean, these reporting disclosures have been brought in for a very valid reason, and it's helped to ensure that businesses are actually doing what they say that they're doing, not paying lip service to climate action, and are actually talking the talk, walking the walk. So they're actually proving what they say that they're doing from a sustainability perspective. And it's really interesting to see that with this standard, verification of greenhouse gas emission reporting is mandatory. So let's dive in. So the ISSB S2 is a brand new global standard that mandates entities, so that's organisations basically, to provide comprehensive information about climate-related risks and opportunities. So for those organisations that have already got ISO standards in place, remember under Clause 4, context of the organisation, it's all about risks and opportunities. Okay, so this will dovetail into that quite nicely. The other thing I'd like to highlight here is about the recent amendment that's affected all of the mainstream ISO standards, which is all about including reference to climate change. This is a perfect example on how you can demonstrate compliance to that particular requirement. Anyway, this isn't about other ISO standards. This is specifically about ISSB S2. And I'm not going to go into too much detail on this because it may not be for everybody. What we have done at Carbonology, and for those of you that don't know, I'm the CEO of Carbonology. One of our carbonologists has actually created an online half-day course, which basically goes through all of the various carbon reporting disclosures and sustainability disclosure reporting requirements. So we're covering off all of the main ones within that course. So just get in contact with us if you're interested in going into the nitty-gritty on each of these reporting requirements. That gives you a much better overview. But for today's episode, I'm going to be highlighting what the scope of this standard is, when it was introduced and when it's coming into effect, what it covers just at a very, very high level, what are the emission reporting requirements, along with the requirements for verification. Very importantly, who actually qualifies for ISSB. And that's where we'll be ending the podcast today, just with hopefully a bit of a whistle-stop tour to give you a bit of an insight into ISSB S2 so that you've got a bit of an understanding about this particular area. And then if you'd like to find out more information, you can sign up for that online course as well. So ISSB S2, and by the way, there is an S1, which I'm not going to go into detail on. I'm just specifically talking about the climate-related disclosures, which is S2. So this was issued by the International Sustainability Standards Board on the 26th of June 2023. So it's only about a year old, and it's effective annual reporting periods beginning on or after the 1st of January 2024. So if your annual reporting period begins on or after the 1st of January 2024, then it's likely to be applicable to you. But I will be covering more on the qualifying criteria later on in the podcast. So the new standard ensures that companies disclose physical and transition risks and their potential on the move towards a low carbon economy. So you might be wondering what these physical and transition risks are. So before I get into the scope of the standard, I'd just like to highlight that. So climate-related physical risks are risks resulting from climate change that could be event-driven. So an acute physical risk, or from a longer-term shift in climatic patterns. So acute physical risks arise from weather-related events such as storms, floods, droughts or heat waves, which are increasing in severity and frequency. So this could potentially have a knock-on effect for your organisation, as it has done for many, many organisations across the globe. So it's all about being aware of these potential risks. So chronic physical risks arise from longer-term shifts in climatic patterns, including changes in precipitation and temperature, which could lead to sea level rises and reduced water availability, and changes in soil productivity, for example. So these risks could carry financial implications for an entity, and as such may cost an organisation, either through direct damage to assets or indirect effects of the supply chain distribution. So for example, if you're in the food industry or agriculture industry, hospitality industry, there are many organisations that could be affected as a result of climate change over the coming years. So the organisation's financial performance could potentially be affected by these changes, and lack of resources and extreme temperatures could affect an organisation's premises. So let's say, for example, if there was an extreme heat wave, could your IT systems or data centres cope with that? Have you got resilience built in to your operations to be able to deal with that sort of disruption to your organisation? So it's all about looking at business continuity in relation to supply chains, transportation needs, and also the needs of employees from a health and safety perspective. So as you can appreciate, this has far-reaching consequences that organisations need to be able to identify, address, and to mitigate the risks. So for those of you that are involved in risk-based standards like ISO 14001 or ISO 50001, this is an extension to that. Okay. Are you new to ISO standards and want to know what it's all about? Or maybe your company has multiple ISO standards, but there's a lack of engagement and compliance. Whether it's quality, sustainability, or risk standards, the ISology Hub is your one-stop shop for all your online learning resources associated with raising your company's standards. From as little as £99 a month, you can have unlimited access to hundreds of online training courses and achieve certification for completion of courses along the way, which will take you from learner to practitioner to leader in no time. So what courses are in the Hub? Well, there are courses on everything a head of quality, sustainability, information security and health and safety would need to manage compliance and raise standards. With over 100 courses available to you, here are examples of just a few. ISO 9001 Internal Auditor, how to transition to the new ISO 27001 standard, the role of ESG in quality management, and how to integrate management systems. But it's not just courses in the ISology Hub. You can access templates, downloads, and action checklists to take your business to the next level. So why not try the ISology Hub today? Just click on the link at www.isologyhub.com and you'll get access to all our resources within minutes. If you're interested in embedding best practice across your organisation or would like to develop an awareness and training programme for employees, we offer a free learning and development session to tailor a bespoke training programme based on your organisation's needs. So we'd love for you to join as an ISology Hub member. Just head over to isologyhub.com to get access to your unlimited training and compliance resources. When it comes to transition risks, it's also looking at having a climate-related transition plan. So this should be part of an organisation's overall strategy, which should include targets, actions and resources for the transition towards a lower carbon economy, including, of course, actions such as reducing its greenhouse gas emissions. So this is where it falls hand in hand with some of the other reporting requirements that I touched on in the previous episode, like SECR, for example. And I'm also going to be highlighting this even further when we're talking about some of the other climate-related and sustainability-related disclosure requirements. So what's the scope of the standard? So the standard applies to climate-related risks to which the organisation is exposed to, which are ultimately physical risks or climate-related transition risks, which I've just explained, and also climate-related opportunities available to the entity. So it's not all doom and gloom. It is about looking at the opportunities that are open to your organisation that you could potentially capitalise on from these climate-related opportunities. So it's interesting that this standard, and it's not a typical financially related standard or an ISO related standard, but it is almost blending the two. I'm obviously talking quite broadly here, but in terms of the core ingredients of this standard, it covers governance, strategy, climate-related risks and opportunities, and interestingly, it covers the business model and value chain for your organisation. And then from a financial perspective, it's looking at your financial position, performance and cash flows. Climate resilience, which is what I mentioned earlier about having that continuity of service. And there is a strong emphasis, obviously, on risk management. And finally, it covers metrics and targets. So this is very much a standard about dotting the I's and crossing the T's when it comes to climate risk-related activities. So what are the emissions reporting requirements for this particular standard? Well, under the International Sustainability Standards Board for Climate-Related Disclosures, companies are required to measure and disclose their greenhouse gas emissions across 3 scopes. So Scope 1, which you'll hopefully be familiar with, I did mention about this in previous episodes, but for those that aren't aware, they're direct emissions from owned or controlled sources. So, for example, emissions from combustion in owned or controlled boilers and furnaces and vehicles, for example. Scope 2 emissions, they're the indirect emissions from the generation of purchased energy that you've purchased as an organisation. So this includes emissions from the production of electricity, steam, heating and cooling consumed by your organisation. And then we've got Scope 3 greenhouse emissions. So this is covering indirect greenhouse gas emissions, not including the Scope 2 greenhouse gas emissions that occur in the value chain of your organisation, both upstream and downstream emissions. And it cross-references Scope 3 greenhouse gas emissions from the Greenhouse Gas Protocol Corporate Value Chain, Scope 3 Accounting and Reporting Standard, which was published in 2011. I did mention about that value chain Scope 3 Accounting and Reporting Standard in the previous episode that I recorded on SECR. But yeah, again, you'll find out more about this if you wanted to on the course that we're running. But this ultimately covers 15 different categories, and that covers everything from purchase goods and services, business travel, employee commuting, through to investments and use of sold products. So it is extensive. Okay, so I won't go into all 15 now, but yeah, that's worth checking that out. Now, interestingly, there's something that I've been talking about for a while now, is the increase in the regulatory requirement to verify an organisation's greenhouse gas emissions. This is something that I'm really passionate about because I think, how the hell are we going to know if we're going to be achieving net zero if we don't even know what greenhouse gas emissions organisations are actually using year on year? What methodology are they using, and where is the transparency around the accuracy of the reporting of that data? So I'm absolutely delighted, obviously. Some organisations might not be, but I'm absolutely delighted that emissions verification is a requirement for ISSB S2. So they have to report their greenhouse gas emissions data in the organisation that's eligible, and it has to be independently verified. And obviously everybody would know that my involvement with Carbonology, so if you want to speak to the team at Carbonology around greenhouse gas emissions data verification, that's the best place to go. So yeah, just hop on a call or drop us an email, and one of our carbonologists will happily talk you through the process for verification. So I won't go into detail on that at the moment, but ultimately verification can provide users of financial reports confidence that information is complete and it's accurate, and it's all completed in a very much transparent methodology. So as part of this ISSB S2 requirement, the disclosure of inputs in Scope 3 greenhouse gas emissions needs to include disclosure about the measurement approach, inputs and assumptions that an organisation uses to measure its Scope 3 greenhouse gas emissions. So last but not least, who qualifies for ISSB? Well, this applies to all organisations that are required by law, regulation or administrative provision to prepare financial statements, which includes, but isn't limited to, publicly listed companies, so those that are, for example, on the stock exchange, large private companies, financial institutions such as banks and insurance companies, and state-owned enterprises. So that's an interesting one. So it's covering public sector as well here. So entities are encouraged to adopt ISSB S2 on a voluntary basis, even if it's not mandated by law or regulation. And early adoption is permitted and encouraged to enhance transparency and accountability in climate-related disclosures. And we know that obviously this is affecting these types of organisations now, but we know that it's likely to come down to medium and then smaller size organisations. So that's just a whistle-stop tour of ISSB 2. I did warn you about fastening your seatbelts. This is another one of those reporting requirements. But as I said, I think that it's essential that organisations are transparent about their reporting around climate if we're actually going to get anywhere on our journey to achieving net zero. So I hope that's provided you with some insights around ISSB S2, and I will be continuing with this series. Part 3 is coming up next, which is all about CSRD. That's the Corporate Sustainability Reporting Directive. So I look forward to catching up with you on the next episode on the ISO show, where we're talking about more ESG reporting requirements. Thanks for listening.
Looking to use ISO standards to drive better business practice? Contact us at blackmoresuk.com to access further information and book your free 15-minute call.